Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 13th. I'm Eric Wilkinson. Yes, you may recognize me from mainstream media as the Wolfman. I'm here not only to talk about the equity markets and markets in general, but economic data and trades I put on when I take them off. I'm not cherry picking any of those. Then I want to also kind of give you a glimpse into how I trade options, because from a floor trader perspective, there's a lot of rules that we used to look at as to when and where to buy and sell these different option strategies. And I hope you can get a little bit of a take on those from these daily market commentaries. Anyway, without further ado, let's get on with the economic data from across the pond. We got Great Britain's consumer price index coming in slightly lower than expected at 1.5%, expected to be 1.6%. The German final CPI came in at 0.1%, expected to be 0.1%. Then we got core CPI out of Great Britain, and that was in line with expectations at 1.7%. PPI output came in at negative 1.3%. That's showing that the businesses are not able to pass on any of their higher cost of these prices. And then we are also seeing the PPI output coming in line with expectations at negative 0.1%. Here in the United States, we got our own consumer price index, and that came in at 0.4% higher than the expected 0.3%. When you strip out food and energy, we get the core CPI that came in line with expectations at 0.2%. Now, markets are really not being so much driven by this consumer price index, although that is going to be something that the Fed really looks at. Well, interesting enough, we have Fed Chair Powell speaking in front of Congress today, and he is talking about the economic outlook. It really looks like they have moved to a more neutral stance. One of the things that I think is funny is that he's kind of talking to Congress about coming up with a federal budget, and that is waning on the markets as well. But the market's really coming back from his testimony. We were seeing the Dow Jones down about 100 points and now possibly still in positive territory. Then we have the greater markets. Let's get on with that. Crude oil inventory is crude oil moving a little bit higher today. We didn't get any crude oil inventories today, but we are seeing crude oil move higher today by about 35 cents. It's right there in line with our point of control. That point of control I was expecting to move down a little bit, but we're seeing that incrementally creep a little bit higher, which means prices being accepted at higher levels for crude oil. I was hoping to see crude oil prices drop a little bit and fill in some of our low volume node that we have been trying to fill in, but we're not seeing a whole lot of volume happening in and around this area here, which is where I was expecting the market to kind of peel back. But we've gone from right here at that $55 a barrel a little bit higher to around 56 and even 57-ish dollars a barrel there. So that means prices being accepted. So we could start seeing the market really test this $58 a barrel and $59 a barrel as we approach that psychological level of $60 a barrel. And all of those lines in the sand really start incrementally going higher, because once we see crude oil moving above this $57 a barrel or even $55 a barrel, we start seeing $3 a gallon in or at the pump. And that is going to cause velocity of money to slow down. Now, you think that 25 cents a gallon or something like that really isn't that big, but when you think about the global economy seeing that much money come out of their pocketbook and just go into gasoline, that really is a deterrent to velocity of money, because every week you might be spending $5 more on gasoline. Well, that $5 more, although it doesn't seem like a lot, once you add it up across the board with every single individual spending more on gas, well, that money could have been spent somewhere else and driving small business, and that small business then spends that money elsewhere, and we really get that velocity of money going. That's what I would like to see right now, especially when we're seeing the economy kind of teeter on whether or not we're just neutral to, being stronger. So for the economy's sake, I would like to see crude oil come off a little bit. That's not going to necessarily drive the market, though, forward. All right, gold futures kind of creeping back towards that $1,500 a troy ounce area. We've talked about this yesterday. It looked like we were finding a bottom when we came down and tested the 1450 area, which lines up with my Fibonacci. We're starting to see that bounce up and away, which is good. I'm almost at 50% of my max profit on those puts I sold for gold future, or actually GLD, the ETF. So making that nice move, finding that support around this 1500 or 1450 area. I'm expecting it to travel up closer to the value area high, which is very close in line with 1500. So I think that that's where the market is going to find solace, despite the fact that we are seeing a neutral bias at the Fed. They are still talking about their not quantitative easing, I should say, but it is really a quantitative easing, trying to weaken that dollar here in the United States. So that should drive gold higher because it is a dollar denominated product, right? So if you see a weaker dollar, it will drive these products higher. It'll also drive crude oil a little bit higher as well. I'm hoping that the demand, lack of demand for crude oil, it going into the manufacturing process or into the distillates, which we get oil from, that demand waning will cause crude oil to come off and offset some of that dollar weakness that we are seeing. All right, bonds moving higher today, mostly on Powell's testimony, coming into a neutral bias. These guys realize that there's only about a 2% probability of a rate cut for the rest of 2019, and then it's only about a 30-ish% chance for the first half of the year for the Fed Fund futures pricing in of a rate cut there. So this pricing is way overdone to the downside. I do expect, I've been talking about this market to move back higher, maybe closer to the 160 handle in bonds. We've got a little ways to go, but getting back above the 78 Fibonacci here is, and back into the 157 handle is steps towards that. You can see that we got the 160 handle right there. It's kind of hidden a little bit. That is a Fibonacci. That's one of my Fibonacci extensions that I placed on a while back. But that is a psychological level that has come to fruition as a support and resistance area. I think we're going to migrate back towards that in the bonds. Then we move over to the VIX. The VIX is higher today. We did test the 13 handle. We were back into the teens for a moment. That was when the Dow Jones was down 100 points on the day. But you can see here we are near the highs and up 14 points on the day. But at one point when we were coming down and tested this 9-day simple moving average, this is the 9-day simple moving average there. It's the blue line. We came down, tested that area. That's when we were down about 100 points on the day. Once Powell started speaking, we started getting a little bit more of a move higher. This market's starting to feel like we're going to snap in one direction or the other. I'm not really quite sure what direction it is, but we're at an influx where I've talked about you get in this tight little line where we're getting these offsetting kind of candles. That seems to me like we're either going to snap up or snap down. And like I said, I don't really have a real discernible picture on that. My guess would be it's leaning towards the downside, but if anything comes through with these tariffs, like holding off, we're going to snap to the upside. If that gets held off, we could be then snapping to the down. So it's really a media or a talking point tweet or something along those lines to what's really going to drive this market going forward. All right, we've got the NASDAQ in negative territory. It was testing, going into positive. And this is what I was talking about here. You know, we got a topping pattern. We've got all kinds of different chart patterns setting up here. And it is back and forth, grinding higher. But again, it seems like it's ready to snap in one direction or the other. It feels like we're getting a lot of pent up energy into this market, and it could go in either direction at any time. We are seeing some good price being accepted up at this level here, though. So, you know, that would lean towards a break to the upside, but any type of bad news coming out or any bad tweets coming out could really drive this market down as well. All right, we've got the E-mini S&Ps pretty much unchanged on the day. Again, we're seeing the same type of situation here with all of these little tiny dojis building up that energy, you know, back and forth every single day on these chart patterns, and it's really making it hard to read the tea leaves on what's going forward with the equities. It's really going to be, you know, the testimony of Powell, Trump tweeting about the tariffs, China coming out and talking about the tariffs. All of these things are really what has been driving this market, almost more so than the economic data, because the economic data is really coming in line with expectations, and it's showing that there is no major upside or downside happening right now. We're just kind of in a holding pattern, it feels like, for the economy. All right. Again, here's the chart of the E-mini S&Ps. This is a 30-minute candle on the daily charts here, with the little blue as each individual day. Overnight inventory very short. Coming into today, we flushed those guys out to the upside, so the shorts are out. We're basically back to neutral from the market. So right now, we haven't accepted to the downside, which would have been very bearish. We've just flushed those guys out. So now it's kind of a coin toss, because it's flushed out, and we're starting to break down here into a sideways pattern, it looks like, in line with what we've seen for the past several days here. So you can see, even going back, we're just kind of in that pattern. That's where I've talked about where we're starting to see that price being accepted at these levels. But it doesn't necessarily mean that we're going to stay in this tight line for very long. Usually when we see that happen, the longer and longer we see that tight line happen across a sideways market, it really is like a rubber band being wound up and ready to snap in one direction or the other. So that's what we kind of have to wait and see on. And I haven't added anything to my portfolio or taken anything off. I'm just kind of holding on to what I have, which is working out. We even have McDonald's finally starting to move a little bit higher today. So it is looking like I'm not going to be out of those short puts at the 200 level for McDonald's. So I'll probably be long McDonald's going forward. And then I'll show you throughout these daily market commentaries how we manage that risk, lower our cost basis going forward, and try and turn that around into a profitable trade. All right, so that's about all I've got for you guys today. Check out tomorrow's webinar. It's going to be a really good one. It's on the short calls. I've got one ready and hopefully set up for gold future, and we will be able to play that, kind of create maybe a wide strangle in there. I've already added the short puts, like I said, almost ready to cover those, looking to then sell some calls against it, and I'll show you how to set that up in that webinar according to my rules, so you can increase your probabilities of success going forward. All right, so if you can't take that, take it easy.